Hello and welcome back everyone. I'm CA Harsh Mehta. Today we are going to discuss about the most auspicious asset in India, gold. Gold is not just an investment here. It is blessings of elders, a safe haven and last resort for families in bad times. Gold has a divine sentiment attached to it. I in no way intend to hurt anyone's sentiment and respect everyone's beliefs. This video is only an analysis of gold from purely an investment point of view. So let's start with it. Gold has given quite some good returns in past. It has given 17% return CAGR in last 3 years and 10% CAGR in last 10 years, and hence it looks lucrative. The most important advantage of gold is that you can sell gold at any hour in any corner of India. And the second most biggest advantage of gold is that it performs good in the times of macro financial crisis, as seen in the year 2008 and as we see right now in the COVID era. When all other asset classes fails to perform, gold gives the best returns. And this also is proved by the human psychology as when the future outlook looks bleak, everyone runs for a safe haven, and gold being a safe haven performs the best in such times. Let's first understand what drives the price of gold. Nothing. Yes, you heard me right. Nothing drives the price of gold, as it does not contribute to any economic activity or growth. It does not produce anything. It is the same pile of gold, whether you keep it for 5 years, 10 years, or 50 years, or how much ever time passes, that pile of gold will remain the same. On the contrary, if we deploy funds in a business, that funds will be used to produce some commodity or service, and hence it will contribute to an economic activity and the money will grow. Gold is a widely abundant available resource and is in no scarcity whatsoever. The growth in the price of the yellow metal is solely based on the hope that in future date someone will pay you more than what you have paid for it today. When we see practically, gold has some limited application in industrial use, and apart from that, it is only used for investment and jewelry purposes. So again, it has virtually no productive use. It can also be seen as an alternative currency which can be used in place of actual currency. The concept of which is no different than the Bitcoin, which was hammered badly because both of these does not have any fundamentals. More often than not, it is also used as a mode of storage of black money as it has no trail. As seen at the time of demonetization, people rushed to jewelers to exchange their old notes which were not showed in the income tax books. There are also many costs that come with buying gold. The very first cost is the storage cost, wherein you'll have to buy a bank locker or buy a home locker to keep your gold safe. The second major cost is the making charges. Making charges are applicable to both jewelry and gold coins. So whether you take it for a ornamental purpose or an investment purpose, you will be paying some amount to the jeweler that will not be recovered at the time when you sell the asset. And these are the major costs that are associated with gold, which is the money lost because of buying and carrying the gold. Gold price is decided by nothing but the demand and supply in the market. That is, the price at which a seller is ready to sell the gold and a buyer is ready to buy the gold. And it has no fundamentals apart from this. One big misconception that a common man has is that I can see the gold and I can touch it. That is, it has a physical presence, as is not the case in the shares. Shares are traded in a demat form now, which is a virtual form of trading. But this is not true, it's a myth, as shares are also totally genuine and are worthy. But this can be resolved by proper financial education among everyone. Now, let's consider another view or more broader view that this buying of gold has on the economy. Gold imports of India in FY 2019 stood at rupees 2,300 billion rupees, and in FY 20 so far it stands at rupees 2,000 crores, which is a big number. This results in a lot of forex outflows, and most of the gold purchased is bought and kept in a locker in home or in bank. What this does effectively is pull out the money from our economy and takes the money out of circulation, which is not available for future growth or any other development needs. Let's take an example to better understand this point. Let's say that India has a rupees 100 as its total currency or total income. Then out of that 100, let's say you have imported a gold worth rupees 20. Now that 20 rupees goes into a different country. Let's say we are importing from USA. Then that 20 rupees goes to USA and you get a physical gold bar or a biscuit in exchange for it. Now, what happens is you'll take that biscuit and keep it in a locker. Now, what money is left with the economy? We only have 80 rupees to fund our development and growth. So, this is the major and very big issue that India is facing currently. And because of this issue, even government brings time and again the gold monetization schemes wherein this big amount of money that is blocked in the form of gold in Indian households can be brought back to circulation. Indian households sit at a staggering 25,000 tons of gold, that is about 110 lakh crore rupees, which is most in the world. And if this money comes back into the circulation, then India will not have to take so much of debt and it can substantially reduce its debt and grow at a phenomenally high rate, which would further increase the development and the standard of living for each and everyone in this country. Though, don't get me wrong, gold is a really good investment option to park a 5 to 6% of your portfolio for its liquidity and crisis hedge nature. One more alternative that is available are the sovereign gold bonds. As the name suggests, they are the gold bonds which are in the form of digital gold. It offers various benefits like interest in the range of 2.5% yearly, and the capital gains on this sovereign gold bonds at the time of redemption are also exempt. So these benefits are not available in a physical gold, and this can improve the return on your gold investment. And not only that, we don't have to incur any storage cost or making cost on these types of bonds. So that is another added advantage. This is a chart for a 12-year period for the returns of gold and Nifty. So, more or less, they have given exactly the same rate of return over a period of 12 years. But these are the gross returns. So, if we consider the storage cost and the making charges on gold and brokerage on equity stocks, and also capital gains, which are favorable for equity for both the alternatives, then we will arrive at a conclusion that the gold has just managed to beat the inflation, and equity had been a better performer during the period of these 12 years and will continue to be so. So overall, it is great to include some part of your portfolio in gold for its liquidity nature, but it is equally important to keep the money in circulation for country's development also. That's it from my side. Catch you in next video. Thanks.